Welcome back, folks. This is the ICT Optimal Trade Entry Pattern Recognition Series, volume number 8, in a series of 20 videos. And today's episode is going to be featuring the British Pound cable. All right, so we already have our chart set to the 5-minute time frame. All right, so we're going to put some lipstick on this. And the reason why I'm going through it a little bit quicker than normal is I'm going to show you a playback of a trade actually that's being shown here. Friday, here's Friday's high, and this is Sunday's trading. So if we're trading on Monday, disregard Sunday. Consider Friday. Okay, Friday's high or Friday's low. New York session, 8:30 a.m. right there, all the way to 11 a.m. New York time. And I'm going to zoom in to this little area right in here. All right, so here's our 5-minute chart, and we're zoomed into Monday, May 18th, 2020. And again, the New York session area where we highlight specific setups for this model. And for some of you that are actually familiar with this channel, it's not the ICT New York kill zone. We're actually giving you a wide 8:30 a.m. to 11 a.m., which takes us up into a little bit towards the midpoint of London close and the heart of New York open. So it's kind of like a kill zone in itself, but not the one everyone's familiar with. So I created this model just to share with the public, so that way you guys can avoid having to pay anybody. Okay, you don't have to pay for any education. You don't have to join all these chat rooms. You ain't got to pay for these signal services. That's why I did this, because I want to put those people out of business. I've already made my money, but they're all scratching the bottom of the barrel trying to get people to do something that they can't even make money with. So I'm proving it because I'm giving it to you for free. And if it didn't work, it wouldn't be shown to you here every single day. Now, I've received a lot of flack already, and I've expected that as well. Folks saying, well, these are only just hindsight examples. Anybody can see this stuff after the fact, and that's all you ever do. ICT is hindsight. And I want to just remind you all that hindsight is how everyone starts. And this is a series basically to try to inspire and motivate individuals, because sometimes this industry can be rather daunting. There's a lot of things that are dangled in front of you, but they're mainly fluff. Just about everyone I've seen on social media, and especially Instagram, are all frauds. None of them make money, not with trading. Okay. And I'm proving that I can not only do it myself, but I can also transfer that information to someone else, and they can do the same thing. So with that spirit in mind, that's why I've done this video series. It's to show you how a setup that is worked with very specific rule-based ideas around a specific time of day. It happens every single day, Monday through Friday. You can't ask for anything better than that. All right, so looking at Friday's chart, high. That's what this line is up here. And we're going to look at the optimal trade entry right here. All right. So we're going to take our fib and draw it from this key low here. What makes us a key low? I'll tell you in a second. So there's our fib. And we're going to extend this out in time. And again, I apologize. I want to keep these videos really, really short. But it's just going to be a little bit more impactful if I show you the business. All right, so here's the swing low. Here's our swing high. The retracement down into optimal trade entry right in here. And you can see how price made a run above. Now, look very carefully. Did it get to half of the standard deviation that makes up the fib range? Okay, this is our dealing range. The projection never even got to 0.50. You don't need it to. Remember, the fib is just a ballpark figure. Markets don't move on fibs. Okay, that's not what it is. The Fibonacci, okay, just helps me frame an idea that is very visual to a new trader. Okay, there's other things that's going on inside this swing that I don't really require this Fibonacci. And most of my students in the mentorship don't require this Fibonacci either. But for a lay audience, people that are just warming up to me and people that just simply want to come back and watch more ICT videos, know that I use the fib just to help frame the idea. It doesn't need the fib. You don't need it. But it helps give the foundation to a trader that can't really see key price swings in a trend or a fractal of price action. All right, so with that said, you can see price comes down, hits the optimal trade entry, and I actually entered right on this candle. Okay, now I did this for a particular reason. It's not important for you to get actually right inside that optimal trade entry. You don't need to get that. Now, it's better if you can, but sometimes you're going to sit down in front of the charts, and this is what happened today. I was talking to my son, and I'm trying to get him going in terms of learning how to do this on his own as well. And I sat down in front of the British pound as I was talking to him, and I said, okay, right now it's forming right now. And I went in real quick, opened up TradingView, and I did a trade and entered it and did the whole thing. So the idea is that it was going to run this short-term high, but using the parameters for this model that I've made for YouTube, reaching for an old high, which is Monday, reaching to Friday's high. And again, this is Friday's high. Price reaches up into it, and the whole business is running above these relative equal highs, this high and this high. So there's going to be liquidity above that. All right. So yes, this is the pattern, and yes, this is what it looks like in hindsight, and yes, you can see the candles I entered on and the candle I exited on. So you can actually see a recording of this trade, and it's seen here, and I'll just let it play out real quick, and then we'll finish this video. So you can see the entry is there, stop was at 21.68. And I'm saying there's going to be a sudden expansion higher. And again, I'm showing you that it's a live data pulled from TradingView. I had many people over the years ask me to go on TradingView, and I've done that. I've abandoned MT4 because it's proven that it can be faked and it's fraud. And here I am giving more of my commentary, and again, drawing your focus up to those relative equal highs. There's an order block that could be tapped, but it's not necessary. In other words, I'm allowing for it to go that low, and it would not change the trade. And it runs up and expands above that high. And it just repeats and loops over on Twitter. So you can see that if you're a member of my Twitter feed. And I mention once in a while, if I feel inspired to do so, I'll draw your attention to something that has my eye. It doesn't mean I'm giving you an entry. It doesn't mean I'm giving you a stop and a target. I just draw everyone's attention to a specific market. And if you're familiar with my concepts, and if you're a student of this particular video series, then you'll know what I might be hinting at. And I don't play the both directions, and whichever one pays out, I'm right there. I'm one side, and either I'm right or I'm wrong. And I'll leave that for you to decide over long-term consistency.